Hey everybody, hello, my name is Darius Anucauskas and I'm the Chief Market Analyst here at Markets.com, and today is Monday, ladies and gentlemen. It's a new start of the week, it's the first day of the week, yes, and it's a brand new trading day of a new month of November. Look, I hope October was a good one for you. I hope you had a relaxed weekend, ready to attack November. Ladies and gentlemen, I'll talk about markets in this session as always, so stay tuned. Hopefully you'll enjoy the session, and I'll see you in a bit. All right, ladies and gentlemen, hello, and good morning. My name is Darius Anucauskas, and I'm the Chief Market Analyst here at Markets.com. And I have some sun dropping on the camera here, ladies and gentlemen. Okay, look, apologies for that. I mean, I look like I'm coming from down from heaven, but okay, look, the sun is going to turn in a while, so hopefully I'm not going to stand up right now. Like it's going to take me ages because I wrapped up the thingy there. So anyway, it's a big deal to cover that, to cover myself here. Look, ladies and gentlemen, welcome everybody. Welcome to this November, the first episode in the November month. I hope you had a wonderful weekend. I hope everything is fine. I hope October was a good one for you. So we'll look at the markets this week. I mean, we'll see what's happening this week, what to expect, how the markets could react, all this usual stuff basically. But before we go any further, as always, let's quickly have a read through our risk disclaimer. So yes, the content we produce does not constitute investment advice or investment recommendation and should not be considered as such. This material should not be taken as an invitation to acquire any financial instrument or product. I'll give you a few seconds to read the rest. I'm not going to disappear anywhere. In the meantime, I'm going to do my usual good morning in the chat room. Good morning, everyone. Yep, there we go. Good morning, everyone. So yeah, I hope, like I said, I hope everybody's doing well. The markets this morning are somewhat on the positive side. The futures I'm talking about. Japan is closed. They're going to be back tomorrow. So we only have, we only have the rest of the world. Anyway, look. Also, before we jump into the charts, just a quick mentioning of our markets. Oh, wrong display that I'm capturing here. There we go. Yes, of course it has to be adjusted as well. Let me just put this one very quickly back into the chart here. All right. Okay. So the website. You can check us out for more info. If you have any information, if you have any questions, you can always reach out to us. We'll be more than happy to assist. Ladies and gentlemen. The economic calendar. Let's jump into that one. Where's the mouse? There we go. Everything is kind of like this. So look, this week, let's kick off with Monday. Okay, Monday today we had a few important pieces of information already coming out. So we had the S&P Global Manufacturing PMI from Australia. Basically, the problem here is that, well, it's it came out in contraction territory, below 50, so just fractionally, of course, but still, if we take a look here, we don't have more data for some reason on here on TradingView. Why is that so? Let me just double check another source. Yeah, okay. Okay, it seems like this is even wrong. This is my problem sometimes, is with these economic calendars. And this is, ladies and gentlemen, I have to tell you one thing. If you're following one economic calendar, I strongly suggest not to do that, because to be honest, you always need to double check economic calendars, because there is always something something kind of wrong. And for now, what I'm seeing here, that I am not seeing the Australian S&P Global Manufacturing PMI figure here from Australia. I'm seeing that from another country, from Indonesia and Korea, but not from. No, yeah, okay, that's an interesting one. So ignore this. In that case, ignore it, because again, I'm from what I'm seeing here right now. It's like I said, just comparing and double checking everything from another with another calendar. Yep, it is. Yeah, it is missing. Okay, so this is basically incorrect in that case. So at least let me just double check. Okay, this data is correct, so this is incorrect. Right, rating dog manufacturing PMI from China. Now that's going to be an interesting one. So it came out lower. It came out below the forecast, and it's basically getting closer to 50, which, well, again, we don't like that. We like numbers above 50, right? Okay, this is still above 50, but okay, look, I mean, it's very close. Whenever we're getting so close to, to going into contraction, then I think that the market kind of needs to start worrying a little bit. However, what we're seeing right now, like I said, is still the market is somewhat elevated, not maybe by much, but still on the higher side. Going further, we saw this morning already coming Swiss inflation numbers coming out. So again, they have a little bit of an issue with inflation. It's not a really kind of okay. The word rising, it sounds bad, like when you're saying that, oh, it's very sad that inflation is not rising. No, you need to have a little bit of inflation, just a little tiny thing, so that it would constantly show that there is some sort of growth. However, when inflation just continues to slide, this is an issue, because then you're kind of thinking, okay, maybe the economy is not growing, okay, when inflation rises way too fast, then it's also not good. You see, you kind of never win, right? I mean, you always need to find that golden middle. So, long story short, one thing for sure is that the Swiss inflation is a little bit on the lower side. I'm assuming the Swiss franc will be a little bit on the cheaper side against some of its major counterparts. We'll take a look at Forex in a bit, but let's go further a little bit. So what do we have else? What else do we have? In terms of economic data, so yeah, UK, all right, now, okay, S&P Global, yes, okay, now this one's fine. This one's we're expecting that one number to come out. Okay, we're expecting a slightly higher number, but certainly still, if it's below 50, still no good. So we have the other manufacturing PMI numbers from Germany and the Eurozone here. So okay, those are also carefully watched. Basically, keep your eyes on those PMIs. Canada today is also releasing now, and the US S&P Global Manufacturing PMI is coming out. So we're all hoping for slightly higher numbers, higher than the forecast. If that's the case, let's say if it comes out, if we see Canada, let's say, jumping closer to 50, yes, it could be a short-term positive thing for the Canadian dollar, but actually if it still remains below 50, then well, that's no good. Anyway, so yeah, we're keeping an eye on that one today. ISM manufacturing. Now, probably this is going to be the more important number. So the ISM manufacturing PMI figure, it's coming out, and we're hoping to see again a jump above the forecast. Ideally, a jump back above 50. But hey, the market right now is still shaky. And look, I said it last week. I talked a lot about the whole in my last session, by the way, in my last session on Friday, last session for the month of October. And so I said that, look, we're having issues right now with the economy in general. The market, the indices are rallying like crazy. Let me just put this one. So I talked about it you can find it in the live session. This is a weekly wrap up here. It's a lengthy video, but hey, kind of put my heart and soul into it. Anyway, what I was saying, that Right now, we're going through this kind of these two economies in a way. One is where everything is related to technology and everything is booming, and that's kind of what's driving the stock market higher. And the other one is the suffering labor market, and we know that, we understand that. And I said to everybody as well last week that the problem, of course, is AI, and you're yes, on one hand, you're making companies more rich because you're cutting costs, and you can substitute entry level jobs with AI, but the question is like actually how sustainable will that be? I mean, how efficient will the AI be? And then let's say at the end of the day, if it can do the trick for you for your company, then okay, yeah, why not? But if you do require a little bit more like brain capacity and like just common sense, you need AI cannot really deliver at this point in time what everybody thinks it can. It can talk to you, but it can actually more like please you, like that you're doing the best thing, and blah blah blah. So long story short, look, for now I will say it this way. Like I said, the economy right now is in a bit of a pickle, in my opinion. Everybody's shouting about how great everything is still, how it's like how it's all fine, how it's all no issues found yet, and everything is just working. But certainly, like I said, certainly there are concerns, and I think that the labor market, especially the U.S. labor market, is showing that clearly, because it's showing that sorry, it's showing. The word "showing" is probably the bad one here that I'm using. We're not seeing the data that needs to be seen, like the labor market job, the NFP numbers. We're not getting those. And this week, on Friday, we should be getting the NFPs. But again, it's the same story, ladies and gentlemen. We are not going to get those numbers probably because the government is still in its shutdown, and yeah, that's it. Like honestly, like we're expecting the numbers of some sort to come out. We want to see the Fed kind of making their decisions all based on data, but they're not getting it, and then we start to question the Fed. How the hell you're kind of if you are focused on if you're focused on the labor market because you're cutting rates in order to support the labor market, but you don't have the data, yeah, we assume that it's crap, but we understand that it's bad, but we're actually not like physically seeing it, like we're not seeing it on paper, and because of the government shutdown. So if you're saying that you're cutting rates because in order to support the labor market, but then where is the evidence that the labor market needs support? Okay, like I said, we understand it needs, but okay, if it's we're going through formalities, we're going through contracts and agreements and everything, like we're going through this we're going through the formal pathway, then okay, let's play that game, but we're not. So we got inflation numbers, but the Fed right now is not focused on inflation. They're keeping an eye on it, but the main priority right now is the labor market. Honestly, like a real like a nice little financial telenovela that's happening right now, and it's really in a way frustrating for us, for more mortal people, who are trading, and because we understand that we do not have access to data like they do, but and we're trying to build our own opinions based on what we get. So, but we don't even get that. So again, like I said, you're kind of flying blind right now. Anyway, it's like I said, it's an interesting period that we're going through. Certainly, we're keeping an eye on the economic data that's happening today. Tomorrow, ladies and gentlemen, tomorrow, RBA interest rate decision. Now that's what you need to keep an eye on. We're not going to have any action because again, their inflation. If you remember last week, I talked about it. Their inflation kind of ramped up very quickly. So for them to go and do a cut, I don't know. I mean, maybe just like until until inflation didn't really start flying high, then yes, maybe you can go and do that. Cut again, just to drop it lower so that you would have more room for hiking later on, when inflation is going to go crazy. So that's an idea. But for now, the forecast is that they're not going to do anything. Okay. So yeah, going further down the line on Tuesday, the U.S. trade balance is coming out. Well, actually, should be coming out because we still have not received that because of the government shutdown. Then we're going further into JOLTS. Right, okay, now because we're in this labor week, in the U.S. labor week, when we're getting the U.S. labor data, we're getting JOLTS on Tuesday. Wednesday we're getting ADP, thank God, and on Friday we should be getting NFP. But again, look, unless some sort of magic will happen, until, like, I don't know. Look, I don't think that something will happen up until Wednesday, because on Wednesday we have the SCOTUS, which you can see the name in the abbreviation that I put in the naming of this webinar, SCOTUS. So the Supreme Court of the United States. Look, what's so important about it? So on Wednesday, there's going to be a court ruling that to see if Mr. President's tariffs were legal, and if he had the right actually to impose those tariffs. Now, from what I understood, from all this bureaucracy that surrounds it, that even if they do decide that it was wrong, let's say he didn't have power, he didn't have the rights to impose these tariffs, then it still does not mean that they're gonna it's gonna get it removed. No, it's not gonna get removed. That's the thing. So it's it's an interesting period. So like you're gonna announce that yes, it was illegal, but it will take time, to get rid of those tariffs. But again, basically that would mean that the president can no longer kind of threaten the world, the markets, with tariffs. That he's gonna impose this and that. So again, like I said, this is the thing. And this is, of course, the White House will debate that, saying that it was a matter of national security and it was a critical moment, and because the government was getting ripped off and blah 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 and stuff like that. So again, it's gonna be messy. It's gonna be like politics, bureaucracy. It's like, just the only problem is that always it's the people who are suffering. So but again, that's the kind of the whole point, right? Anyway, so look, we're gonna get these numbers, JOLTS. We're gonna get those ADP figures on Wednesday. Where's that number? ADP, there we go. We're expecting a higher number this time. So not much. We're, at only 25K above zero. Previous figure was at minus 32. But again, it's going to be interesting to see if this will be revised somehow. If it will be revised, and let's say it gets revised to a bigger minus. I mean, honestly, this would be just, to me, it would be just proving that that the previous NFP that they didn't release in the beginning of October, when the government went into shutdown just like a day before going into before, actually not a day, before kind of releasing before the releasing of NFP numbers. And this is, like I said, this is where the interesting bit comes in. Like, then they didn't want to release that number because probably it could have been a devastating one. Maybe that's why they're not going to release the this NFP number as well. If they don't, Well, I'm sorry. How credible can the data be? How trustworthy can the data be going further? So this whole government shutdown is actually just more damaging the reputational side. That NFPs are not going to be those that we will be watching carefully. Maybe ADP should be the one, because why? Because at least they consistently deliver something. So again, like I said, it's a big thing in general. It is a very big thing, and for now, the ADP is at least something that we're focusing on. Look, I'm always the person who said that you should not gauge ADP with NFP because they do correlate, and of course, always was the more trustworthy was the NFP. However, nowadays it seems like ADP kind of is showing maybe the real economy. So we look at this number here. Look at this chart. I'm gonna zoom in a little bit here. So this year, since the beginning of this year, we have already been in negative territory for like 3 times. So 3 times we have been in negative territory, and I mean we have not been in negative territory since what? Since 2021. I think that, let me just double check here. 2021, I think that was the number here. No, that was no. It was, I think it was going to be 2020, the pandemic period. Basically, that was the last time we had that major crash in March well, actually end of February, beginning of March of 2020. Look at this. I mean, then we gradually declined. We gradually drifted lower. We went into negative territory, and we're now just sitting comfortably below zero. And I'm sorry, this is not the best thing, I would say. And that's why I'm saying, that's why all these deals, big deals between tech giants, it's kind of more in favor of them. It's not really helping the consumer. They are making deals which are better for them. It looks better on their side. They are like doing these cost cutting things, but for the consumer, it's not really very like beneficial. Maybe for a few, but not for all. Oh, by the way, I can see that the sun has shifted. There we go. There's no angel light on me anymore, but anyway, no longer a saint. It never was. Anyway, so yeah, keep your eyes on Wednesday's data here. Then going into we have we have ISM services PMIs, S&P global services, and composite PMIs coming out on Wednesday as well. But then on Thursday, Australian trade balance, some Japanese data, but everybody's going to be watching the BoE. Look, the bank is not expected to do anything. Sorry, my mouth was drying out. Needed a little bit of tea. So the bank, like I said, is not expected to do anything. They're expected to keep the rate unchanged at 4%. I think that the big question right now is the UK budget, where they're planning to increase taxes on everybody. And that's where I think the BoE is also I think gonna take a bit of a step away, just kind of maybe remain data dependent, as they like to say. But one thing for sure, what I'm going to be looking at, I'm going to be looking at these votes here. So there are three. The expectation is that there are going to be three members in favor of a cut, but unchanged there are six. So basically, we're diminishing the amount of people who are in favor of keeping the rates unchanged, and one more person adding to the team of rate cuts. So if by any chance the actual number comes out somewhere still there's going to be, let's say, instead of 3-4 members for a cut and then 5 members for keeping it unchanged, of course the interest rate will remain unchanged, but certainly at that moment it will be an interesting situation that maybe in the near future we actually could see a cut. We could expect the British pound to weaken on that news, but again, I think that depending on which pair you're looking at, if it's going to be GBPUSD or maybe GBPJPY, maybe depending on against which currency it will be, you will be watching the GBP. It could react accordingly. So for example, if it's let's say GBPUSD, then we could see a little bit of a drop. If, like I said, if we do see a 4 here and the BoE MPC vote cut, we see a 4, let's say, we could see the British pound weakening a little bit. However, if it's against the JPY, maybe it might not drop, it might not rise, but it could just stay somewhat on the flat side. Anyway, and Thursday going further, yes, the BoE. Then you see the pileup of continuous and continuing and initial jobless claims that we have here. 6 now? Yeah, 6. I mean, this is absurd, and this data is needed for the market, but it seems like maybe it's not the best, data to show right now in order not to spook all those positive deals that are the tech giants doing, so yeah, or I mean, they're already more on the finishing side, but still. And the earnings season, that's another thing. We're right now in the earnings season, ladies and gentlemen. We are seeing big companies delivering their earnings, their numbers. I think I need to remove here I need to change this is the inconvenience of this calendar actually, because if I want to only watch the US stuff here, I'm gonna need to get rid of all these anyway. So look, I'll go to a different one very quickly. I'll just check what's happening from the top companies this week. Okay, so we have Palantir, we have this today, we have the Lowe's, a few companies here and there, yes. But tomorrow, AMD, Shopify, Uber, so yeah, Pfizer, Marriott, so you keep your eyes on those. You check out the economic calendar, AIG, Yum Brands, those are all coming out tomorrow. On Wednesday, AppLovin, if you're looking at that, McDonald's, Qualcomm, ARM, DoorDash, that's the names that I see right now, the top names. On Thursday, AstraZeneca, ConocoPhillips, Airbnb, Datadog, that's what we're seeing here, and again a bunch of other companies, and Constellation Brands on Friday together with Duke Energy. So keep your eyes, a few important companies coming out this week. Keep your eyes on those. And like I said, Friday, yes, we have an interesting day. Trade balance from China. The number is on the growing side, it seems like that, but let's not rush into things, okay? But certainly, yes, the big question, are we going to get the NFPs? You see there, we already have 2 NFPs here. To be honest, I doubt that, because again, Wednesday is the big day, because again, there's going to be this Supreme Court of the United States vote in terms of verdict, in terms of are the tariffs lawful or not. Again, I'll repeat myself from what I heard and read, that even if they are unlawful, it's not gonna mean that straight away they're no longer in effect. And it will take time until it can be reversed or something like that. Anyway, so let's have a look at the markets. Let's have a look at the charts here. So Nikkei, like I said, is closed today, but I'm loving the chart. Look at this. I mean, I just wanted to show you that the monthly candle is insane. We finished the month with a 16.64% gain. Okay, roughly. Again, let's say 16%. I mean, that is just wow. Like, I mean, look at this parabolic movement. It's a monthly chart that I'm looking at. We are above the upper bound of the Bollinger Band, Well, what can I say? It's what comes up must come down. Thing we had, the same thing we had with gold, and it did correct lower. I talked about it, so we did correct from that 4,000 kind of 380 to all the way to 4,000. So here, an EK. Look, it's going to be interesting to see how today's trading session is going to go in the US. If we somehow see a little bit of a corrective move lower, maybe this could follow suit. China. China is, yes, it started off the day, the first day of trading of November in a positive note, with a positive note, and we are seeing this nice little action. To the upside. However, this barrier here, this is what I talked about previously. So look, I said that, look, this 4,000 kind of zone-ish, maybe a little bit above that, it's an important area of resistance. So if we do clear it and we stay above it, great, I'll go higher. But we failed really to, on last week, look at this with the weekly candle here, we failed to stay above this hurdle. We just created a nice little false breakout and then kind of drifted back down. So look, if we eventually can stay above this little 4,000 territory, the psychological 4,000 zone, I'm going to lean a little bit more towards the upside. Ladies and gentlemen, let's jump into, by the way, where is my ASX 200? Let's have a look. ASX 200. Can I find this one? No, not trading view. I need trading views. ASX 200. Can I find this one? ASX. No, this is not the one. Right. Okay. I cannot find the, or actually, will it be S&P, something like that? No, as well, not. Okay, that's fine. That's not a big deal. Just wanted to check the Australian market, but anyway, need to find the correct ticker for that. I don't want to use another broker's pricing in a way. Dow Jones Industrial Average. Let's have a look at that one. I think that this is where the beauty starts. Look, with the Dow right now, it's kind of still somewhat flat-ish. We saw the like I said, the market is somewhere around that price. Let me just actually double check. Let me just, around 47,592. Well, actually, yes, we're closed on Friday, so we're actually around the same level. But what's interesting, that last week we kept on hitting, we kept on creating new all-time highs in a way, but this barrier, the 47,750-ish, has been a very good area of resistance. So I'm going to keep an eye on that one, to be honest. I'm going to keep an eye on that hurdle. If we do continue to trade below that hurdle, below this area, I'm kind of leaning towards the downside. Look, don't get me wrong. Economic data will be important. The Wednesday's Supreme Court ruling will be important. If they rule out that it was unlawful, then this is actually the tricky bit. Now, as I was thinking about this morning, and I was thinking that will it be actually a positive thing? Because again, you're removing tariffs, right? I mean, this should be great, wow, cheaper, better, everything's wow, boom. I don't know, because I somehow doubt that we could see maybe a positive reaction, because it seems like then we were rallying based on the wrong ideas, right? We were rallying on the fact there were tariffs imposed and the market is rallying, right? I mean, so it's kind of giving this sense, the wrong sense, the wrong feeling that you're doing good things, but for the wrong reasons, and like I said, something like that, something in that area. So again, I think that if the court ruling happens and we see that the tariffs were unlawful, like I said, theoretically should be positive for the stock market, but something tells me that maybe actually it wouldn't be a very positive thing, just because it could just create this bad image that the country is kind of run in the wrong way, let's put it this way. Anyway, we'll see, of course, we'll see. Let's not over speculate. I think time will tell, and that's why I keep on saying to everybody, never rush into a trade, wait for it, and then you can do something about it. The S&P 500, okay, similar story again. It's this 6,911, it's not the all-time high. But what's interesting that, like I said, this is the barrier that's kind of still holding. So 6,920-ish, that's the current all-time high. But what I'm looking at, like I said, the 6,911, if we do start clearing down, I'm going to start looking at some higher levels. We're currently actually not far from where we closed on Friday, so maybe just a little bit above. Then yeah, we'll see what's happening next, because for now, if you're looking at some higher levels, I think that the easier option is just to wait for a clearance of the current all-time high. But again, you see, this is the thing, the labor market in the US is not feeling the love, but the indices are, and that's why for now I would say I'm just going to remain a little bit on the careful side. For me, the downside scenario will come somewhere maybe on a break of this 6,764. However, maybe we could already start looking at some lower levels if we do drop below the 6,820. So that could be the first little step towards examining lower levels. So do not rush into things. NASDAQ very quickly. NASDAQ, okay, this one's kind of stuck as well. Again, the same story. If you're looking for some higher levels, then wait for a break. Wait for a break of this barrier here, this 26,180. If we can get that move, wonderful, great. But if you're looking for some lower levels, now this is where I think what I'm going to do here is I'm going to keep an eye on that 25,700. If we do drop below that, I will consider a move to the downside. So long story short, for now, I would say this way, that if you're looking for some lower levels, then wait at least for something like that, for at least a drop below this hurdle. Let's jump into DAX, the German index. Okay, look, I mean, we rebounded from this hurdle, this 24,000 zone. Let's kind of round it up. Yeah, we dropped below it on Friday, but today you can see that we're pushing back up. So this 24,000 is the area for us to maybe keep an eye on for now. So, but if you want a little bit something more reassuring, then I would say keep your eyes on the 24,340, 3940 zone, and then yeah, we could kind of go from there. Now, looking at these levels here, what I would say here is I would say that this is my game plan. I think that this makes sense because, look, I said it before and I'll say it again, DAX loves ranging, and we do see that occasionally. And this time, again, look at this bigger range, look at the smaller range. So DAX does love to range. So let's maybe utilize that. So for now, let's wait for those breakouts. The FTSE 100, very quickly, we saw a little bit of a correction on Friday, but now we're seeing a push back up. Look, a clearance of the current all-time high could open the door to some higher levels. For the downside, I would prefer to see a drop below the 9,696 here, and then we'll just take it from there. DXY, yep, very interesting action here. We've pushed above the 99.56 zone right here. If we can stay above it, then great, I'll go higher. And at the moment, everything is looking quite positive. So I was positive. Look, with DXY, I said it again, and I said it before, and I'll say it again. In the beginning of October, I was saying I'm going to be a little bit more on the bullish side on the DXY and the US dollar. Because why? Because I do believe that it needs to strengthen a little bit going into the holiday season, so that the U.S. consumer could feel that their buck does travel at least a little bit further, and then we can after the holidays we can kind of bring it back down again. Why? Because we're the market, everybody's will be back into this trade. The topic will be trade again, and we know that the U.S. needs a cheaper dollar in order to make their exports a little bit more attractive. But you know, it's the holiday season, right? Let's give people something, a little bit, at least something. You give them like a little bit of a stronger dollar so that they could, you know, buy more and support the economy this way. So yeah, that's why I'm still targeting the upside. I'm targeting this 200-day EMA together with the 100.25 zone right there. Jumping into the Forex world, ladies and gentlemen, AUDUSD. So I talked about this. I said after we broke this downside line, I said to you that in a way I'm kind of leaning. I'm still somewhat positive as long as we stay above the midpoint of the Bollinger Band here, which is the 20-day SMA. If we continue to trade above that, then yes, I will continue. I will continue targeting the upside. Look, this is the thing. If we do see the RBA coming out with, you know, no cut, this, like I said, this could in a way somehow support the Australian dollar. Now, normally you would say, you know, a hike could support that, but not in this case. So maybe, you know, yes, I'm still somewhat bullish on on the US dollar, but maybe against other currencies, not the Australian dollar. And I think the Australian dollar could recover here a little bit and just kind of, unless the stock market starts correcting lower significantly, and if that's the case, then if we start seeing a decent correction lower, then I would say I think a risk off environment could start dominating, and we know that the Australian dollar is a risk currency, and it performs well when the environment is in risk on. Right now it is, but if, like I said, it suddenly changes to risk off, then I think Australian dollar could suffer a little bit. AUDNZD, one of my favorite pairs. This one continues to push higher. Great. We removed the 1.1445 level on our way higher here, and now the question is like, where next? 1.15, that's what I'm going to aim for. AUDJPY, as long as we stay above the hurdle here, above that 1.1445. AUDJPY, yes, pushing higher. Risk on, risk off monitor. We're clearing the key resistance area, so yep, I'm going to go further north. So then, oh, by the way, AUDCHF. I talked about the Swiss inflation that was on the lower side and said that probably the Swiss franc is not feeling the love. There we go. That's what we're seeing here. EURUSD, and is it the same story on EuroCHF? Yep, the same story. EURUSD, there we go. We're clearing the 1.1542, and that's confirming a forthcoming lower low. As long as we stay below this hurdle, yep, I'm going to continue targeting the downside. My next target is the 200-day EMA together with this 1.14 zone. Like I said, EuroCHF pushing higher purely on the weakness of the franc. I think that there could be some maybe more upside. However, if this provides resistance, strong resistance, then this downside line taken from the highest point of 18th of October, the highest point of August. If we stay above that, if we stay below this downside line, there is a chance for a move lower. But again, let's not rush into conclusion yet. Let's wait for it to come out. And look, okay, let's jump very quickly into the GBPUSD. Beautiful continuation move lower here. So yes, the British pound is suffering at this point. We dropped below the 1.3142, so it's opening the door towards that 1.3015, and in general towards that psychological 1.30 zone. We haven't been at the 1.30 level. Last time we were here was back in April, ladies and gentlemen. Yep, April. Let's have a look at what's happening in the USDCAD side. On the USDCAD side, we pushed back up here. The US dollar is dominating right now. We're pushing higher, yes. So let's keep an eye what's going to happen here with this barrier, the 1.4080, because that's my gateway towards some higher levels. For now, this idea seems to be working still. What I said to you last week was that if we do climb back over the psychological 1.40 zone, I'm leaning towards the upside. USDJPY, good move, yes. We remain above the 153.27, so okay, the next target is the 154.80, or maybe even the 155.95 there, and then we'll take it from there. USDCHF pushing higher. Look at this, clearing this area. Wow, this is a good move. So yeah, I think that there is potential for further upside. How if we first stay above this broken downside line, and second, if we do break above the 0.8076, and if that's what we do, if we can clear that area, I think that yes, more buyers could join in. Let's jump into commodities very quickly. Gold, ladies and gentlemen, gold. So 4,015, that's where we're trading right now, a little bit above that psychological 4,000 zone. I think that there is potential for an upside here, an upside move, but I'm aiming only for the 20-day SMA here on my Bollinger Bands on a daily chart, and then we'll go from there. 4,088, 89, that's something around there that I'm aiming for. Silver. Silver also doing a nice little retracement, but with silver I'm going to be a little bit more on the careful side. If we do push above the 49.83 territory, then yes, I'm going to go a little bit higher, but if we don't, okay, I'm not saying that I'm going to get bearish, but for me the bearishness could come on a break of this upside line, and if we can do that, then great. But for the upside, yes, I mean, I need a clearance of this area, of this psychological 50 zone, and then we'll just take it from there. Platinum. Platinum is, yes, it's stuck. It's stuck. I don't like it. I like the metal, but I really don't like what it's doing right now. So it's just kind of stuck like here in this little range, and yeah, it's not really the best thing that to watch right now. Let's let's leave it for until better times. Palladium, okay, this one's stuck here, and it has potential to go higher, but I think that some clearances are needed, like for example a clearance of this 1486 zone. Let's jump into copper. Yep, very close to this barrier here, the 1026. If we can clear it, I'll go higher. Very quickly on cocoa. Okay, look, after rebounding from this downside support line, which you don't normally draw, but on the monthly chart it looks good. So if we, on a daily chart here, we start pushing above the 6,480 zone, I'll go a little bit more to the upside. I will get comfortable with the downside on a break of this downside line. Sugar, one of my beloved sugars. There we go. Look at this beautiful reversal. Look at this little doji here at the end of October. Okay, and this to me looks like a nice little island reversal. Right, interesting. Could be an interesting option. Let's see if sugar can climb back up. I think that if it climbs back above this 14.74 territory, I will go higher. But if it struggles, then okay, then it's a difficult one. Soybeans continue to rally. I do not expect anything else from them. I said to you previously that look, this is a barrier right now here. This is what I'm watching, this 10.7783 zone, and if we can clear this whole thing here, then yes, more action to the upside could be possible. Let's actually jump into something more fun. Oil. Initially we had a push higher on oil. Because again, OPEC leaders this weekend decided not to increase production until the end of the year, so we saw a little bit of boosting the oil price. So maybe just this could actually travel back up, but from the technical perspective, I need a clearance at least above this, a clearance of this downside resistance line taken from the high of the 23rd of June. If we can get that move, wonderful, more buyers could join in. Natural gas, this one is on fire. I mean, look at this. This is just crazy. I talked about this, I remember when I was saying, like, keep your eyes on the psychological 3 level and blah, blah, blah. And there we go. We are now, like, passing through the 4. And the question to me is right now, actually for myself, 4.9, is that a good option? That's the current highest point of this year. So we've been here. So can we do that again by the end of the year? Let's keep an eye on this one. And finally, ladies and gentlemen, let's jump into cryptos for the dessert. Now, Bitcoin dropping beautifully. I'm loving this movement here. It's forming something of a nice little head and shoulders pattern ish. Left shoulder, head, right shoulder. Neckline being the 38.2 on the Fibonacci retracement. I talked about this level last week in my crypto update. I said to you that, look, here that I did a little quick crypto update on Friday. I said to you that I'm going to be a little bit more on the bearish side if we actually start drifting lower and we clear this 38.2 on the Fibonacci retracement, which is drawn, by the way, from the lowest point of this year to the current highest point of this year. So if we can clear this, my next target is, of course, is the 50, and then we'll take it from there. But also, yes, I'm watching this the crossroads of these two trend lines. If we can get a nice clearance of that, then wonderful, great, more sellers could join in. Bitcoin Cash, drifting away here, and we remain below this downside line. So that's in a way good for the bears. We dropped below the 533 territory, also good for the bears. And look, for now, I would say I'm pointing more towards the 38.2 rather than the upside, and let's see if we can reach that. Ripple very quickly, 2.4, yes, drifting lower, 2.37. That's probably where what we need to keep an eye on. A nice good drop below that could open the door to some lower levels. Ethereum as well. Everybody's like making some sort of these like weird head and shoulders patterns. Again, it's like, I'm trying to see something where maybe it's not, and then I'm trying to see what I want to see, right? But maybe it could be just a little bit more simple, like, for example, it's a descending triangle, and that's it. So this is a good area of support right here, and why not? Why not to consider this as a nice bearish descending triangle? Litecoin. Yep, drifting nicely to the downside, further away from that psychological 100 level, and but again, for this one, I need to see a drop below the 90.30 zone. Dogecoin, there we go, clearing this hurdle, the 0.1785. That's great. So it's opening the doors to some lower levels. Let's see how far can we travel. Polkadot, yep. We cleared the 2.89, and as well, let's see how far we can travel. And finally, Tron, one of my favorite ones. There we go, drifting lower. So we did actually. There we go. On Friday, I said to you that I'm seeing a falling channel here, but what I'm also seeing is a little bit of my favorite pattern here. Whenever we have a strong decline and then a gradual decline, it tends to break to the upside, and then there we go. We got the breakout. It wasn't a significant one for sure, but did we get a breakout? Yes, we did. So we stayed below the 0.2985, which is the lowest point of September. We stayed below that, and well, to be honest, it's kind of pointing a little bit more back down rather than the upside. So, ladies and gentlemen, that is it. That is a wrap. Thank you very much for watching and listening. I really appreciate your time, your views, your likes, your comments, everything I do. I appreciate that. So thank you very much. Hopefully you enjoyed it. And if you did, then please join me on Wednesday. As always, ladies and gentlemen, don't forget to subscribe to our channel in order not to miss the future upcoming videos. Not only the Markets Talk, but also the top news. And we'll go from there. Ladies and gentlemen, thank you very much, and I'll see you on Wednesday. Bye-bye.